I want to make two comments for homework 3. The first comment is related to one typo for the formula. So let's look at the formula of model 1. So here, these are good. I think the formula that has some issue is this formula for net interest after taxes. I think I mentioned that the net interest should be the interest expense minus interest income. Now the interest expense is here, interest payment on debt. The interest income is here, interest earned on cash and marketable securities. So we should take interest expense minus interest income. Well, one thing is that interest expense is already expressed in a negative value. Okay, so what we can do is just to take the sum of this row, this column, this cells, and this cells. That will be the net interest already. So the negative of net interest already. We just need to add a minus sign. So here, the adjustment that I want to make is, instead of taking the difference, I think here should be a plus. So we still need to add a minus sign because this will be negative, negative of the net interest. So adding one more negative sign, that will be a positive of the net interest. So we want to add net interest. So we want a positive number for net interest. And then here, this will be 1 minus the tax rate will be the tax adjustment. Since both of these two items are pre-tax, so they will enter the calculation of profitable tax here. So the amounts here will affect the tax payment. Tax payment, what is a cash expense, so it cannot be added back. So that's why we want to do the tax adjustment. So I'm gonna change the formula here and expand it. Okay, so here this will change the final share value projection. Let me see if it's the final value now. Okay, it's still running. Okay, so the final value I got is 628 for model 1. Let's see if I modify the cost of goods sold. Change it to plus. And the share value I got here is 861. I go to model 2. The value I got is 1,199, roughly 1,200. Another comment that I want to make is the treatment of debt. I noticed this, but I already made the video, so I did not change it in my last video. But I'm also impressed that one of you mentioned it to me that he also spot that the calculation for debt here. So here for current liability and other liability here. So we want to eliminate all those financial activities. So these are financial activities. There is actually one more financial activities. So currently we are summing from just one asset. So let me check the formula here. We're only using this 5,245 number, which is under debt and finance leases. So these are financing activities, that's true. But there's one more financing activities. So here, current portion of debt and finance leases. So this could be also related to the financing activity of the firm. Others can be seen as operating activities or other activities. But here, I think both this current portion of debt and also the debt and finance leases, they are debt related, financing activity related item. So to be more precise, in the spirit of DCF model, I think a better way may be just to add these two together. So I'm not going to change it here, but I want you to keep in mind that when you are doing your own DCF model, so making sure that you are not missing any other financing activities under this total liability and equity. So the spirit is just to, okay, so we want to separate financing activity from the operating activities.